when these assets go down, in my view, liquidity shrinks. Whether it shrinks and then assets go down, or whether assets go down and then liquidity shrinks, I'm not entirely sure about. But liquidity seems to be shrinking. And I think we may wake up, all of us who are investors, in a year's time with our asset value being lower than it is today. Now, some people will lose 50% of their asset value, and some will lose 90%, and some will lose maybe just 10%. You want to try to be in the group of people that loses the least money in the next 12 months. It's not a question of making money, but how do we lose the least money? That would be my philosophy and investment strategy at the present time. I don't think we're going to make a lot of money.
Hey everyone, my name is Anthony Fatsis and welcome to another episode of the What the Finance podcast. On this podcast, I have the pleasure of welcoming back the one and only Marc Faber. So Marc is a well-known contrarian investor with decades of experience and the editor and publisher of the Gloom, Boom and Doom report. So Marc, thanks so much for coming back on the podcast.
Well, it's my pleasure. Thank you, and good day to you and to your viewers and listeners.
Yeah, good day to you as well. And it's definitely an interesting period. We were talking about it before. All the current focus is on geopolitics and what's happening in the Middle East, and sort of how after the Israel and US attacks, Iran has just started attacking basically every country in the Middle East. It does seem as if it's the final lashings out of a dying regime in Iran. Do you agree with that, or do you have an opinion on it?
Yes, my view is that, of course, the regime in Iran is not particularly desirable, but provide me with any regime in the Middle East that is particularly desirable. I mean, I always cite Dubai and Abu Dhabi as great success stories, which is to some extent true, but they had most fortunate conditions in the last 40 years, in the sense that oil prices had a rising tendency, and that obviously boosted the incomes of oil producers in the Middle East. And to be fair to them, they had good leaders, which I cite frequently, because at school and at universities, all you hear always is that democracy is the best system. But here in the Middle East, we have examples of cities or city-states that became very wealthy without democracies. But in the case of Iran, I have to say that the regime should sort of change is evident. However, who is assuring us that the next government is any better than the current? That is the problem. And the aggression of the US in Iran may actually lead to Iranians holding together and wanting to defend their country against the aggressor. So I'm not so sure that the aggression that took place is a very wise move. It may destabilize the Middle East. It may cause significant economic damage, not just in the Middle East, but to the world. And the reaction of asset markets has been across the board negative. In other words, just about everything went down except oil. But oil stocks, they rallied a while, and as an example, today they're down. So there this intervention in the Middle East by Mr. Trump and also Israel may actually be the catalyst to asset price sort of decline or asset price deflation that I expected for some time now.
Okay, really interesting. So you see this sort of continuing, at least this issue continuing in the near term, at least for a couple of weeks, or do you have any opinions on that, or not sure?
Look, the stock market in America and also elsewhere is at a relatively high level, with few exceptions in emerging economies and so forth. So say a stock is at $100. It could be in a few days or in a few months at $120, and it could be at $60. You understand? The valuation of assets may vary considerably. And I mean, I've seen now in the gold market and silver market, silver was over $100. Now it's below $80. I mean, it goes very quickly. And so your portfolio could be worse, say at month's end, February 28th, could be worth 100. And when you wake up on March 31st, it could be down to, I don't know, 80 or 70, or maybe it's up to 150. We don't know. But all I'm saying is the valuation of assets based on fundamentals is very difficult to calculate. And given the war situation, we may have a situation where during war times, in every wartime, around the war times, inflation picks up and prices go up. And that may happen this time, which would make it difficult for interest rates in the US to decline. And we may need lower interest rates because of the economic decline that will be caused by the war in the Middle East. So in theory, interest rates should go down, but maybe they won't go down because of rising inflation.
Yeah, it seems like it sounds like the sort of repeat of the oil crisis in the 70s. Is that where you see it could potentially follow a similar routine to that?
Who knows? Who knows? Yes, we don't know. There are lots of things we don't know. And the one thing that nobody knows for sure is what are actually the objectives of the US in Iran. I mean, they say that Trump wanted a regime change, but that is difficult to achieve. It's easier said than done, given the political structure of Iran and the military and the Revolutionary Guards and so forth. So I'm not so sure he's very clear about his objectives.
Yeah, if it were to sort of the regime were to topple, and hopefully that happens before there's too much damage to the rest of the Middle East, you'd imagine that it would be the safest the Middle East has been in 50 years. You know, it seems like Syria's been resolved. Lebanon would be sort of resolved there, and you'd hope Yemen as well. It seems like it would actually make the Middle East better, the challenges, if that happens.
I'm not sure about that. This is a very questionable view that the Middle East would be more stable. It may be less stable because it would seem to me, looking at the geography of Iran and the size of the population of Iran, and looking at the surrounding countries in the north, Russia and Kazakhstan, and in the east, you have Pakistan and Afghanistan. I mean, it's very difficult to see how anyone would let America sort of invade Iran. I think they may watch it, but the moment America would put troops on the ground in Iran, I think they would face tremendous resistance by other countries, including possibly China. We don't know, but I don't think that the Chinese have a great interest that the US controls the entire Middle East, since China receives a substantial portion of its oil from the Middle East.
Yeah, and that's the challenge, that the majority of its LNG, the majority of its oil, all comes through the Strait of Hormuz, which is, or Iran, which is it's closed at the moment. So you imagine that they're really struggling after the Venezuela conflict as well, where they got a lot of their oil coming through
Yes, that
Russia
would be my
sanctions. Yeah.
impression.
So do you see this shifting the power? I guess China and BRICS was rising at one point, and now it seems as if Trump's going at all the allies of BRICS and trying to sort of almost collapse them. Do you see this having a shift on the world stage?
Well, in my view, the rise of BRICS countries is inevitable. And of course, that, and I've written about this 10 years ago already, in the war cycle theory, it's very clearly demonstrated that if you have a superpower and then you have a rising power, and economically the rising power at some point may actually overtake the existing power, that this leads to tensions, because the existing power doesn't want to lose its hegemony and its superiority, especially the US. If you look at the US in the 50s and 60s, they were way ahead of everybody else technologically, in innovation, and also in military power. Then in the 70s, gradually Japan and Taiwan and South Korea eroded American manufacturing, but slowly, because Japan wasn't a huge country. But then in the 80s, Japan became big in the capital market. So it became a factor attracting capital. And by 1989, at the peak of the market, Japan, with just a population of 120 million, they had a market cap of 50% of the world's stock market capitalization. It is now around 5%. But then China came up and other countries, and suddenly the US is no longer the industrial powerhouse it used to be relative to the rest of the world. So we have now China, that is a dominant industrial power. The largest industrial production in the world is in China, and not in Europe, and not in the United States. And now we have also India coming up, and we have countries like Bangladesh coming up, and Pakistan, and Brazil, and South Africa, and so forth. These are very significant developments, which someone like Mr. Trump and the US cannot change. They can maybe put some brakes on that development, but the likelihood that they will fail and come out actually weaker than their position before the war is very high. I mean, as an American citizen, if I were an American, I would say, what the hell are we doing in the Middle East? what is our objectives? They are not a threat to us. You understand? If you want to put America first, you shouldn't go and start a war in Iran. You're putting Israel first. Maybe this is the idea. Maybe Trump, he is a master at distracting people and always having new news to capture the attention of the public. Maybe he wanted to distract the American public from the Epstein files, where he is prominently mentioned in several places, I'm sure. And then he goes and supports Israel because maybe Israel blackmailed him. Who knows? I have no idea. But it's an unusual thing to do for someone who got elected on the platform that America shouldn't get involved in wars overseas and so forth. And suddenly he attacks Iran. There was no immediate threat to America.
Yeah, that has been quite weird. As you said, he talked about not starting any wars in his last presidency, saying that he was the president of peace, and now he just keeps on starting them, it seems. So it seems like there's definitely been a shift in what he's saying, and doesn't seem to be America first.
Yes, but I want to point out here one thing. I mean, we stock strategists are always accused of being wrong in our predictions. And I think the political analysts are even worse. So I'm an economist and I'm an investor. Of course, I'm interested in geopolitics and what countries do with their political philosophy and systems and so forth. But basically, I'm trying to preserve capital for my clients and for myself. And I focus on economic and financial developments. And I think that the war has introduced a sort of appetite for liquidity. Now, the expression liquidity is very difficult to define because I'm not entirely sure whether, say, stocks and bonds and cryptocurrencies and paintings and other assets go up because of increased liquidity, or whether as they go up, they create increased liquidity. So, but one thing I'm quite sure, when the stock market goes down, when the property market goes down, and we had a big decline in commercial properties in major cities in the world, including Chicago and Los Angeles, San Francisco, and so forth. Yes, I wanted to say, when these assets go down, in my view, liquidity shrinks. Whether it shrinks and then assets go down, or whether assets go down and then liquidity shrinks, I'm not entirely sure about. But liquidity seems to be shrinking. And I think we may wake up, all of us who are investors, in a year's time with our asset value being lower than it is today. Now, some people will lose 50% of their asset value, and some will lose 90%, and some will lose maybe just 10%. You want to try to be in the group of people that loses the least money in the next 12 months. It's not a question of making money, but how do we lose the least money? That would be my philosophy and investment strategy at the present time. I don't think we're going to make a lot of money.
And how? What assets do you think will sort of protect you and stop you from losing money? Because it does seem, yeah, it's been a bit of an everything bubble the past couple of years, maybe except for bonds. So yeah, do you see that switching or?
Yes, I think you bring up an important point. What about bonds? And I've written about this, and I'm sort of bullish about bonds. But I have to say one thing. The bond yield now is, say, 4% for the 10 years treasury. In theory, in the current situation, and this happened the day they announced the aggression against Iran, bonds in the morning rallied. But then they sold off because then bondholders and analysts got second thoughts, and they kind of became convinced that the war would be inflationary. But the initial reaction was for bonds to rally. And I think the initial reaction is probably correct. But at 4% interest, I cannot say that bonds are particularly cheap. In other words, that they'll rally a lot. I think they can rally because the war may be used as an excuse for Trump and the Fed and the Treasury to print more money. That is my concern. And so initially, maybe bonds will rally somewhat, but long term, money printing would lead to more inflation and possibly significantly more inflation, which would be very negative for asset markets, especially financial assets.
Yeah, it does seem like that's the case. And you
But
don't.
also, you know, if someone told me the US goes to war against Iran and so forth, someone might have concluded that it will weaken the US dollar. But no, it actually strengthened the US dollar. And we have to understand the financial market nowadays, the market capitalization is a multiple of global GDP. It's much bigger. Traditionally, in a sound economy, we have the economy that this size and the financial market maybe just this size. In other words, when I started to work on Wall Street in 1970, the stock market capitalization was 25% of GDP. Now it's somewhere between 150 and 200% of GDP. In other words, formally, I could say, okay, the economy does this and that will have an impact on the financial market. Nowadays, I have to say, the financial market is doing this and it will have an impact on the real economy. So it's changed around, and exactly what the impact of the present downturn is, I'm not sure. But personally, I believe that the US economy in the last 10, 20 years was driven mostly by capital appreciation of assets. In other words, the guy, he has a house. It was worth 100,000, say 10 years ago. Now it's worth 400,000. He feels richer. He borrows money and goes and spends that money on a Cadillac or whatnot. And once the asset value goes down, he will lose his appetite to spend, and he will cut down on spending. In the initial phase, he may borrow more money. That is a possibility. But at a later stage, he may curtail his spending. And I think the decline in asset value in the US will have a very significant impact on real economic activity, on consumption. And that will lead to a horrendous recession. Horrendous.
Yeah, and it's all linked, as you said, to liquidity. It's the debt, it's the increasing money supply. So if
Yes.
so if there's any slowdown in that, or if there's all the other issues you mentioned, then it seems to be a bit of it's going to spiral, or potentially it doesn't seem like there's many positive scenarios in the future.
Yes, I think I mean, it could become very ugly.
Okay, is there any country that you think could perform better? I know you've mentioned some assets, but any country that you think could perform better during this situation, or do you think, as you said, it will just be a lot of things going down and trying to find the things that don't as much?
Well, I think that everything might be sort of affected, but my view is that the US is now sort of occupied in Ukraine and in the Middle East, and that they will be sort of much friendlier towards China than they would have otherwise been. So actually, I'm not sure that the portfolio managers around the world will think my way, but my way of thinking is that this intervention in the Middle East might be sort of mildly positive for Southeast Asia and China and Asia in general, because it's now most unlikely that the US would sort of provoke a war between China and Taiwan. I think that they will abstain from. And I think that they will come to the conclusion that they need China not necessarily to cooperate, but not to be unfriendly or military unfriendly. So personally, I think that the Asian markets are okay. I think they will go down because, you know, people sell in Europe, then they sell in America, then they think, oh, Asia is still high. We also sell Asia to raise liquidity, as I pointed out before. And the same happens in Latin America. I mean, theoretically, Latin America is the continent the least affected by the problems in the Middle East or in Central Asia. But it's also being sold because the portfolio manager in America, he sits there, he invests money, he wants to raise liquidity, he's going to sell something that hasn't gone down yet. And so today, the Latin American markets are down substantially.
And that's the same with gold and silver. They're sort of being sold off as well.
Yes, this is very interesting that they are being sold as much as they're being sold. That, I have to say, is a little bit a surprise to me. I didn't expect them to go up necessarily, but I thought they would go down less than equities. And what has happened, they go down actually significantly. And the gold miners are very weak. They have been weak already for several days or weeks, but they are particularly weak in the last 2-3 days.
Yeah, and do you see this as just a pullback from, it's obviously been very high momentum. They've gold, silver miners have gone up quite a lot over the past few months. Do you see this as a pullback before further appreciation, or how are you looking at these markets?
Look, this is always a very good question. When you're in a bull market and then you have the first downtrend or the first setback, do you rush in and buy or do you stay aside? I wrote in my report that the best course of action when something like this happens and you have a shock and assets move a lot, the volatility increases a lot, the best course of action is frequently to do nothing and to wait until the markets become again less emotional and more rational. In, let's say, hostilities are occasionally favorable for stock markets, and occasionally they're not favorable. And I would like to define this. If you are in a bull market, hostilities offer a buying opportunity because the market sells off and then it goes up, like 1991 in the US, the Gulf War offered a buying opportunity. But on other occasions, the markets are very high, like now. The valuations are very high, and the hostilities may lead to a catalyst to push prices down, and they could go down substantially. Particularly the indices like the S&P and the Nasdaq, which are loaded with technology stocks and the so-called Magnificent Seven shares. So that I would avoid.
Yeah, okay, makes sense. And Mark, thanks so much for your time today. We sort of covered quite a lot about the world and markets and what's happening. But my last question is, what is one message you want people to take away from our conversation?
Well, the message is very clear, that nothing is clear. And I have to say, I mean, you can see I have lots of books and I've read a lot, and I study every day and I follow the markets every day. Now it's night time in Thailand, so I work until about 2, 3 in the morning before I go out and play pool. But to be frank, even though I'm a newsletter writer and people expect me to know, I don't know how the world will look like in 5 years' time. I could imagine a scenario where it doesn't look very good because we have in the US a president who I have voted for twice. I mean, I just couldn't have voted for any Democrats, but I would have voted for Trump. But I think that he frequently takes decisions without thinking very clearly about the consequences of these decisions. And I think the aggression in the Middle East towards Iran may be a colossal mistake. That would be my view. Now, financially, it may be used by the Fed to print money. And then in nominal terms, maybe assets go up and recover, but it's not sure. You know, we printed money and commercial properties in America went down in price. Many buildings are down 80%. 80%. I just spoke today to an insurance expert. He says the insurance industry is toxic. And I can believe him. And so in 5 years' time, we don't know how the world will look like. And I would diversify. I would own some real estate and some stocks and some bonds and cash and precious metals. And I would also diversify outside the US. Maybe it's a good time to buy some properties in Tehran. I don't know. Maybe. Or maybe it's a good time to buy properties in Moscow or in Kiev. We don't know, but I would diversify my assets and I wouldn't hold all my assets in the US. It would seem to me that in the US, money printing will be necessary, and that as a result, in nominal terms, in dollar terms, asset prices go up, but the dollar collapses. Can be. But I recommend to be diversified. And I recommend as a strategy in people's mind not to think, oh, how do I make 20% overnight? But to think, how do I not lose 20% in a year's time? That is what I would think in terms of strategy.
Great message. Thanks so much, Mark, for your time and for giving us that message. But if anyone wanted to find out more about your work and what you do, where would the best place for that be?
Well, our website called all in one word, gloomboomdoom.com. I repeat, gloomboomdoom.com, all in one word.
Perfect. I'll put that all in the description below, but thanks again for your time.
Thank you very much, Anthony, and to your viewers and listeners. And have a nice day. Goodbye.
Hey everyone, thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that. But it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching and see you on the next show. And you also might like this video right here. All right, thanks again.